Hi everyone. I'd like to make a video on two topics. First, the introduction of a central bank digital currency, and second, I'd like to update everybody on the progress of the book that I'm writing. Let's start by talking about the central bank digital currency. I know it's a topic of concern for a lot of people in the gold world because they worry that it might adversely impact gold. It might replace gold as a bank asset. Now, let's think through what a central bank digital currency actually might replace, and let's start with cash. Now, we know that there's a war on cash going on. There's a lot of evidence for it, and it started in the middle of the last decade. In 2016, the European Central Bank, or ECB, announced their plans to eliminate the 500 euro note. They didn't do it right away, but they said that they were planning on doing it and planned on having that done by 2018 or 2019. Now, the very same year, 2016, Larry Summers, who was a former Treasury Secretary under Bill Clinton, wrote a proposal to eliminate the $100 bill. Now, why is this important? It's because at the time, 80% of the U.S. currency in circulation was $100 bills. So if you eliminate the $100 bill, you will eliminate essentially 80% of the currency that's circulating throughout the world, or at least the U.S. currency that's circulating throughout the world. Now, the U.S. didn't actually implement that particular recommendation, but the Eurozone did implement their recommendation. In 2018, the Eurozone stopped producing the 500 euro note, and they didn't pull the current 500 euro notes out of circulation. I believe that doing so would have been met with tremendous political opposition, especially out of Germany, where a lot of people like carrying cash in their wallets. But they stopped producing new ones, and I believe what this means is that gradually we're going to see the 500 euro note disappear from circulation through attrition. So what's going to happen is, as these notes enter the banks will see them and they'll basically pull them and use as an excuse that they were damaged or worn, and simply not replace them the way that they replace other damaged and worn currencies. Okay, so let's talk about the reasons for basically eliminating cash, at least the reasons that are being given by the powers that be. Primarily, they're talking about combating tax evasion and also terrorism. But Larry Summers also stated something very interesting in his report in 2016. He stated that he believed that banks could manage negative interest rates even if cash was available to be withdrawn from the banks. Now, this was a very interesting statement. He didn't need to make it, but he did. And that's essentially an admission that it was on a lot of people's minds, that basically cash and negative interest rates are incompatible with one another. I mean, you can think about it this way. If banks were to introduce deeply negative interest rates, all people would need to do is pull all their cash out of the bank, store it in vaults, and then they'd have the cash and not be penalized for holding it. But this would create a big problem for the banks because all of the bank deposits are basically denominated in these currencies, and they're fractionally reserved, and so if all the cash gets pulled out, then it essentially makes the banking system insolvent. Now, in 2017, there was a book published called The Curse of Cash, and this was written by Ken Rogoff, the same Ken Rogoff who co-authored It's Different This Time, which was basically a story about how economies tend to slow down once debt to GDP levels exceed 90%. But anyway, Ken Rogoff is a highly connected political figure, and The Curse of Cash was basically all about how cash hamstrings banks. Not only does it represent a threat to the banking system, where if too much cash is pulled out at once, banks become insolvent, but also this whole issue of cash presenting a barrier for banks to implement extraordinary monetary policies. And the book also presented a blueprint for how cash could be eliminated. But the same book was touted in a short report by the Council of Foreign Relations, the CFR, in the same year. And if you're not familiar with the CFR, you should look them up. The directors will be interesting to you, and the members, you'll note, are very highly politically connected. So basically this was on everybody's mind in the middle of the last decade, and so it's obvious to see that there's a war on cash going on. Now, there also seems to be a war on privacy. In fact, the Treasury just released a report detailing the measures that it's going to be taking as part of this new American Families Act that Biden once passed. And part of the measures to pay for some of the programs will be to close the tax gap. And what is the tax gap? Well, it's several $billion worth of uncollected taxes that the IRS believes is owed to it, but it can't seem to collect because people are underreporting income. And it believes that cash is creating this cloak of invisibility for phantom income that's not being reported to the IRS. So the Treasury is pushing to give the IRS new capabilities, new powers, where they'll have the ability to see bank transaction records. And what could be more appropriate for that than a digital currency that uses blockchain? I mean, all of the transactions are basically recorded, so they'll be able to see everyone who held a currency, everyone they passed it to, when they did it. It basically lends itself to infinite backwards auditing. So it's perfect, right? So for all these reasons, I believe that a central bank digital currency is likely to replace cash, not gold. Now, why also do I say that it's not going to replace gold? Well, look no further than the recent central bank gold agreements. These are released about once every 5 years. Every one of the ones that has been released in the past has stated, quote, gold remains an important element of global monetary reserves. That's an admission by the central banks that gold is important. Now, why is it important? Well, currency is no longer directly exchangeable for gold. Right? It used to be, but not anymore. It created too much of a constraint for the banking system, and so they severed the convertibility. And this was also the way that the U.S. prevented all the gold in the Treasury from being drained. Now that said, gold still stands as collateral for the currency, much the same way your house stands as collateral for a mortgage. Now, the bank has a lien against your house, and that lien has value to the bank, but it's only exercisable in the event of a default. So similarly, the currencies are kind of like liens against the gold. And in fact, the Treasury has admitted that the physical currency in circulation of the U.S. stands as the first lien against Treasury gold. Now, gold currently stands as 21% collateral for the US dollar at its current valuation, and 37% collateral for the euro. And if you don't believe that, all you need to do is take a look at the European Central Bank balance sheet, and you'll see that gold covers about 37% of the currency outstanding. Now, the banks know that gold will be needed in the event of currency crisis. It helped get the U.S. out of its currency crisis back in the 1970s. It will do so again in the event that confidence is lost in the currencies. So it's an important reserve asset of the banks, and the banks have labeled it as a Tier 1 asset. So gold's probably not going away anytime soon. Now, will a central bank digital currency be a one world global currency? I don't think so. Now, why not? Basically, recently, Augustin Carstens made a speech. Now, who is Augustin Carstens? He is one of the high-level directors for the Bank for International Settlements, the BIS. The BIS is the central bank of the central banks. They basically coordinate policies, they help the central banks to work together. It's a pretty powerful organization. And in this speech, Augustin Carstens stated, quote, I think each central bank should have its own sovereign currency. Now, I'll say that again. I think each central bank should have its own sovereign currency. Now, this is the central bank of central banks stating this. So I think based upon that, we can expect that there's not going to be a global currency anytime soon. But there probably will be a lot of cooperation, because in the same speech, Carstens said he also thought that it was very important for central banks to work together during the early phases of these digital currency developments. Now, why did he say that? Well, one, it seems a perfect time for the central banks to coordinate their activities. But two, if they do this correctly, it will help facilitate international settlements, but it will also help the central banks to share data. And I believe that sharing data is of high interest to the powers that be. Now, how would a central bank digital currency be introduced? I think it would be very difficult if it was replacing the old currencies, just wholesale. That's not going to fly. For one, we know that new currencies have a very difficult time being introduced by countries where the countries try to say this currency is worth X. That just never works. In fact, Ludwig von Mises talked about this in his book, The Theory of Money and Credit. Fiat currencies can survive, but they can only be introduced if they have an anchor. And in the past, the anchor was gold. And since that, then the anchor has been slowly moved out, so we're only loosely tied to gold now. But the anchor for our currency right now is basically the transaction value that it had yesterday, the day before that. It's in the memory of the people. So they know what a dollar is worth, or a euro is worth, or a pound is worth, or a yen is worth. And that anchors the value of currency in their minds. And if they introduce the digital currency more as a blockchain ledger to replace the current ledger system of the banks, they can introduce the new currency system in a way that's somewhat transparent to people. And in fact, it's in a way that a lot of people would probably support, because people are getting used to doing digital transactions. They like doing digital transactions. Plus, Bitcoin and crypto, it's kind of trendy. But they wouldn't necessarily need to wholesale replace the dollar or the euro or the yen or the pound all at once. All they would need to do is gradually phase out those currencies. They could say that, okay, this blockchain currency is 1-for-1 with the currency of the realm, and then just stop printing the cash as it starts to not be needed so much anymore. So gradually, as the cash makes its way back to the banks can retire it, say, oh, this is damaged, this is worn, we're just going to pull it out of circulation and maybe not replace it with new currency. So I think this is going to be a gradual transition, not something that's going to be sudden. It's probably going to proceed much the way that the 500 euro note is being pulled out of circulation. It's just going to happen gradually. Okay, so that's my take on the central bank digital currency situation. Let me talk a little bit about the book that I've been writing. So I've written several chapters at this point, and these have been pre-released to my Patreon members. We've had some good discussions on them, and in fact my Patreon members have made some good comments, and that's resulted in me making a few changes, so I've appreciated that. Chapter 4 is going to be released soon. Chapter 5 is being edited, and Chapter 6 is currently being written. It's going to be a 14-chapter book, and at the rate that I'm going, I think I'll probably have all of the chapters written by the end of this year. And that means that I can start the process of formatting it for self-publishing physical copies by early next year. Now, if you're interested in reading the chapters ahead of time, as well as having access to all the reports that I've been writing, such as the one that I've summarized in this video, please visit my Patreon site. I've left a link in the description. So, as always, thanks for your attention, and I look forward to being able to announce at some point soon that the books will be ready for order. So thank you all very much, and I hope you have a pleasant weekend.